Good evening, everyone. My name is Jill Devi Prasad, and I'm the head of investment at Jio Financial Services Limited. On the declaration of the results for the year ended 31, 2024 of the company, it gives me immense pleasure to welcome the analysts, investors, and our colleagues to this virtual meeting. We have with us today our MD and CEO, Mr. Hitesh Sethia, and our Group Chief Operating Officer, Mr. Charanjit Atra. In this call, all participants will be in a listen-only mode. The earnings presentation is uploaded on our website, www.jfs.in, and on the stock exchanges. Before I hand over the call, I would like to read out the safe harbor statement. Certain statements are forward-looking in nature. These statements are based on management's current expectations and are subject to uncertainty and changes in circumstances. Actual outcomes may vary materially from those included in these statements due to a variety of factors. I will now hand over the call to Hitesh to discuss the business in detail.
Thank you, Jill, and good evening, everyone. A very warm welcome to all of you on this call. Let me begin with a recap of an eventful first year of Jio Financial Services Limited, in which we laid the foundation blocks for the business build-out while we got listed on the stock exchanges simultaneously. The demerger of JFS from Reliance Industries Limited, which was announced in November 2022, culminated in the listing of JFS on BSE and NSE in August 2023. As a part of the demerger, JFSL as the holding company and the 4 customer-facing entities, amongst others, were demerged. That is, an NBFC, a payment bank, a payment aggregator, and an insurance broking entity. The latter 3 were operating while the NBFC had yet to commence operations prior to the demerger. While the demerger was underway, people, process, and systems were set up at the holding company and at the NBFC grounds up. The business models and technology stack of the 3 operating entities were reimagined and transformed in parallel to ensure that a strong foundation for scale and profitability is established. Further, a robust governance, risk and compliance framework were also set up across the group. A uniform and fit-for-purpose technology stack for all support and control functions across JFSL entities have also been implemented during this period. Now, during this entire setup and team build-out, the management team has remained observant about the rapidly evolving market developments and took a risk-calibrated approach to fast-track our secure lending products as the focus for our NBFC. While the demerged businesses were being set up and reimagined, new businesses were also being conceptualized during this period, primarily to the asset management company and the leasing business. In July 2023, as you may all know, we had announced a 50-50 JV with BlackRock to foray into our asset management business. Earlier this week, we were happy to inform you all that we had expanded the partnership with BlackRock to include wealth management and broking business as well. The operating lease business was also conceptualized during this period as an additional business line to offer embedded financing solutions for home digital devices with a view to enhance affordability of such devices for our consumers. Our approach overall is to offer embedded and digital products to our customers. Towards this, a unified app is being developed and will be launched shortly for our customers. Let me now begin with the business updates, starting with our NBFC and our leasing subsidiary. With the foundational work done over the last few months, Jio Finance Limited, our NBFC, is well positioned to capture the lending market opportunity by adopting a digital-first business model to cater to consumers and businesses. The portfolio is being built out with due consideration to customer risk profile and business dynamics. In the past quarter, the supply chain financing solution for businesses have been launched. Products including loan against mutual fund, home loan, and loan against property, are in our pipeline. On the leasing front, Jio's Leasing Services Limited will offer operating lease solutions to consumer and businesses under what we call a device as a service model. This model involves embedding a leasing solution along with installation, maintenance, and or support of such digital equipments as air fiber, laptops, television, etc. This model not only enhances affordability for our consumers, but also increases operating efficiencies for our leasing business line. Moving forward onto our payment bank and payment solution subsidiaries. Jio Payment Bank Limited provides digital banking solution to consumers and small businesses. The services offered include savings account with debit cards and a host of consumer payment solutions such as UPI, Aadhaar-enabled payment services, domestic money remittances, etc. The business is being driven by garnering customer deposits and facilitating daily banking needs at a low cost with a digital native approach. Customers in this bank are acquired and serviced digitally and through a network of about 2,500 business correspondents as on date. In the past quarter, the bank has revamped its digital savings account offerings and also launched virtual debit cards, leading to a rapid increase in the number of customers acquired. In the coming quarters, we expect to ramp up our business correspondent touchpoints to facilitate further growth. Jio Payment Solutions Limited is our payment aggregator business, which helps merchants grow their business by giving them solutions to accept payments across various consumer touchpoints. The customer segment served includes merchants, merchants, enterprise merchants, retail merchants, and delivery merchants. Merchants will be able to access a full suite of payment products, including in-store solutions such as QR codes and point-of-sale devices, and online solutions, which includes our all-in-one payment gateway infrastructure, which has comprehensive payment options. The business growth here, we believe, is being driven by strategic and technology tie-ups with banks, large enterprises, and creating a low-cost digital distribution architecture. In the last year, the subsidiary has successfully launched a pilot of the Jio Voice Box for its merchant customers. Moving on to our insurance subsidiary, Jio Insurance Broking Limited distributes insurance products of multiple insurance companies across the country digitally. The product portfolio is comprehensive and includes fire and property insurance for businesses and extended warranty, life, health, and motor insurance for our consumers. The business growth is primarily being driven by strategic partnerships to facilitate embedded insurance, direct digital approach to customers, and large enterprise relationships. In the last year, we have continued to expand the partnership suite for our insurance broking entity and have increased the number of insurance company tie-ups to 29 insurance companies as of March 31, 2024. The insurance subsidiary has also launched embedded insurance for white goods and bespoke sachet products, which are sold at the point of sale in the customer journey. Furthermore, an institutional sales division has also been set up in the last year in this subsidiary. Next is an update on our asset management company. The operationalization of the joint venture with BlackRock, which we had announced in July 2023, is progressing well with ongoing setup of systems, infrastructure, and people recruitment, including the leadership team recruitment. The regulatory process for requisite approvals is also underway. As mentioned earlier, only last week we had announced that the scope of the JV has been expanded now to include wealth management and broking business. The launch of these additional business lines is subject to regulatory and statutory approvals. Now, I would like to talk about what we believe are our strengths and right to win. JFS will leverage best-in-class, cost-effective, modern back-end and front-end technology stack. We continue to derive benefit from the fact that we do not have any legacy technology. Our distribution approach will be direct to customer, digital, or at point of sale embedded in the customer journey. Finally, we will leverage three important data sets, that is the credit bureau data, data from the account aggregator, and alternate data to aid in contextualizing offers to our customers and providing early warning signals. From a risk management perspective, necessary frameworks and rule engines have been implemented. The framework is continuously being enhanced with machine learning models to ensure better customer selection within defined risk appetite for each business lines. Amongst other aspects, we believe that as Jio Financial Services Limited, we are endowed with three important things that are necessary to build a robust business at scale. Number one, the Jio brand. Number two, capital. And number three, customer adjacency from our ecosystem. With the ongoing build out of digital, intuitive, and simple product offerings across the various business lines, which we've spoken about earlier, we believe that these three key strengths will provide a very strong impetus for sustainable growth in times to come. Our core principles for building out all these businesses remain unwavering. Number one, reputation above all. Number two, regulatory adherence in letter and spirit, given that we are a multi-regulated group. Number three, return of capital. And number four, return on capital. We will continue to build on the strength of brand, capital, and the wonderful team that we are putting together. We are committed to enhancing accessibility, affordability, and prosperity for our customers by simplifying financial services. The foundational work sets a base to capture the vast addressable opportunity across the spectrum of financial services, that is, lending, investments, payment, and insurance solution against the backdrop of a strong and vibrant economy. I would also like to take this opportunity to thank all my JFS colleagues who have, with utmost dedication, spent the last year setting vital foundation blocks for the various businesses that we've spoken about. I would also like to thank all our shareholders for your continued faith and support to us. Now, I would like to hand over the call to my colleague and our Group Chief Operating Officer, Mr. Charanjit Atra, to take you through our financial performance. Charanjit, over to you.
Thank you, Hitesh, and good evening, everyone. I am pleased to present to you the financial highlights of our first annual results as a listed company. The financial results for the quarter ended March 31st, 2024 are prepared under Indian accounting standards as prescribed by the Ministry of Company Affairs. As you may be aware, Jio Financial Services has submitted an application for conversion of the company from an NBFC to a core investment company in accordance with the approval given by the Reserve Bank of India pursuant to the demerger. The company is a holding company and consolidates the results of its various businesses. This includes the consumer-facing entities, namely Jio Finance Limited, Jio Insurance Broking Limited, Jio Payment Solutions Limited, Jio Payments Bank Limited, and Jio Leasing Services Limited. Further, the consolidated financial statements also include the results of two more entities. Firstly, Reliance Industrial Investments and Holdings Limited, which is an investment holding company accounted for on a fully consolidated basis, and secondly, Reliance Services and Holdings Limited, which has been accounted for as an associate. Furthermore, during the year, JFSL, through its wholly owned subsidiary, Jio Leasing Services Limited, established a ship leasing business in GIFT City. This is a 50-50 JV called Reliance International Leasing IFSC Limited with Reliance Strategic Business Ventures Limited. The above legal entities are effectively managed by independent boards with a robust governance structure. As a part of the governance framework, the company has put in place comprehensive group-level compliance, audit, and risk functions for effective monitoring. In addition, our endeavor is to optimize the cost-to-income ratios across entities by leveraging technology and efficient use of resources. Technology plays a vital role, not only in the businesses as mentioned by Hitesh, but also across all governance, control, and support functions. We will continue to invest in emerging technologies such as AI and ML to drive innovation and optimize all internal processes. Moving on to the financial performance. Since the appointed date of the merger was the closing business hours of March 31, 2023, the profit and loss account for the year ending 31st March 2024 was the first year of the company owning and managing the assets and liabilities that were transferred as a result of the demerger. Accordingly, the financial results of FY24 includes the income and expenses on the assets and liabilities for the entire year. For FY24, our consolidated profit after tax stood at rupees 1605 crore as compared to rupees 31 crore for the year ended March 31, 2023, primarily due to increase in total income and increase in the share of net profit from the associates. The total income is represented by interest income on investments, dividend on investments, realized gains on sale of investments, and unrealized gains on changes in the fair value of investments. This has been offset by increase in the total expenses represented by staff expenses and other operating overheads, reflecting a general increase in the business. The standalone profit of the tax for the company for FY24 was rupees 383 crores as compared to rupees 31 crores for the year ended March 31st, 2023, primarily due to increase in total income represented by interest income, realized gains on sale of investments, and unrealized gains on changes in fair value of investments, offset by increase in total expenses representing increase in staff cost and other operating overheads in line with the setting up of the business operations of the company. The total income in the consolidated profit and loss account increased from rupees 44 crore to rupees 1855 crores, primarily due to the following. Increase in interest income in the standalone profit and loss account and interest income on fixed deposits in the wholly owned subsidiaries to rupees 938 crores in FY24 as compared to rupees 38 crores in FY23. Dividend income amounting to rupees 217 crores on shares held by our subsidiaries, which was transferred pursuant to the demerger of the company. Fees and commission income of 152 crores in FY24, representing fee income from our subsidiaries, primarily in the insurance and the payment aggregator businesses. The total expense excluding impairment in the consolidated profit and loss account increased from rupees 6 crores to rupees 325 crores, primarily due to the following. Staff cost of rupees 116 crores in FY24, reflecting the cost of employees of the company and its subsidiaries in FY24, and increase in other operating expenses to rupees 209 crores in FY24 as compared to rupees 5.56 crore in FY23, representing the first year of business operations post the demerger. It also includes the expenses of 3 operating entities that were demerged and have been fully transformed and now are well positioned for increased and sustainable growth. Further, Increase in certain realized and unrealized gains on certain money market instruments classified as fair value through profit and loss account to rupees 547 crores in FY24 as compared to rupees 3 crore in FY23, resulting out of the treasury activities undertaken by the company and its subsidiaries on certain money market instruments transferred to the company and its subsidiaries as a result of the demerger. The consolidated profit after tax for the quarter ended March 24 was at rupees 311 crore as compared to rupees 294 crore for the quarter ended 31st March 2023, primarily due to increase in total income and increase in the share of net profit from associates. The total income is represented by interest income on investments, dividend on investments, realized gains on sale of investments, and unrealized gains or changes in the fair value of investments. This is offset by increase in total expenses marginally, represented by staff expenses and other operating expenses, reflecting a general increase in the business of the company. Now, moving on to the balance sheet items. The company's consolidated net worth stood at 1,39,148 crores at the end of 31st March 2024. The company's total assets included 41.28 crore equity shares of Reliance Industries Limited, represented by 24.09 crore equity shares, representing 3.56% of Reliance Industries Limited, held by Reliance Industrial Investments and Holdings Limited, and 17.19 crore equity shares, representing 2.54% of Reliance Industries Limited, held by Reliance Services and Holdings Limited. The company has also made two equity investments during the year. Rupees 40 crore in its subsidiary Geo Leasing Services Limited for its leasing business, and rupees 4 crore in Geo Payments Bank Limited, thereby increasing our holding from 76.98% to 77.25%. Moving on to the standalone profit and loss account, the total income in the standalone profit and loss account increased from rupees 44 crores to rupees 639 crores, primarily due to the following: increase in interest income on fixed deposits and certain money market instruments in FY24 as compared to the earlier year, which was transferred to the company as a result of the demerger. Increase in certain realized and unrealized gains on certain money market instruments classified as fair value through profit and loss account to rupees 255 crores in FY24 as compared to rupees 3 crore in FY23, resulting out of the treasury activities undertaken by the company on certain money market instruments transferred to the company as a result of the demerger. Similarly, the total expense excluding impairment in the standalone profit and loss account increased to rupees 117 crore from 6 crore, primarily due to the following: staff cost of rupees 43 crore in FY24, reflecting the cost of employees hired by the company in FY24, and increase in other operating expenses to rupees 74 crore in the current year as compared to rupees 6 crore in FY23, representing the first year of business operations post the demerger. Similarly, the standalone profit after tax for the quarter ended 31st March 2024 was rupees 78 crore as compared to rupees 71 crore for the quarter ended 31st December 2023. This was primarily due to increase in the total income. The total income is represented by interest income on investments, realized gains on sale of investments, and unrealized gains on changes in the fair value of investments. Further, the increase in total income was offset by increase in total expenses, a marginal increase though, which is represented by staff expenses and other operating overheads reflecting a general increase in the business. The company's standalone net worth stood at rupees 24,437 crore as of 31st March 2024. With this, I would like to hand over the call back to Jill. Thank you so much.
Thank you both for the presentation, and thank you everyone for joining this call. Again, our earnings presentation is uploaded on our website www.jfs.in and the stock exchanges. On behalf of JFSL, this concludes our earnings call. You may now disconnect your line.